In today's episode, we'll break down two important stories. First, we'll talk about a Dhan Dhana Dhan IPO for Jio, and then we'll talk about whether India is ready for the super El Nino. Welcome back to the Daily Brief by Zerodha, where we cut through the noise to help you understand what's actually happening in the most important stories from business and markets. I'm your host Akshara, and today is Tuesday, 23rd June. Before we start the show, we'd like to tell you about our new episode on subtext. So, the role of the dollar and its influence on global trade is a complicated story that has constantly changed over time. On Markets by Zerodha, we got Brad Setzer to tell us how. Most of Twitter knows Brad is one of the sharpest voices on all things balance of payments, and he's a senior fellow at the Council on Foreign Relations. He also served at the US Treasury and the National Economic Council. So we recorded this conversation while the Iran war was unfolding and oil markets were watching the Strait of Hormuz, and not long after Trump and Xi had met in Beijing to negotiate a trade deal. We used the moment to ask him about the things he thinks about most: why the dollar is really strong, what an AI bust would do to it, how the manufacturing surpluses of China, Korea, and Taiwan quietly finance the American deficit, and what China would have to do to rebalance. The links to the podcast are in the description below. Coming to the first story. If there was one thing that the Indian capital markets were waiting for with bated breath, it's the obviously bumper listing of Jio. They just filed their IPO papers with a fresh issue, meaning Jio is raising money for itself and not existing shareholders selling out. As we covered just last week, NSE filed their papers too, and combined, the estimate issue sizes of both companies put together could be around Rs 65,000 crore. Now, these numbers wouldn't have made sense a decade ago, and it's impressive that our capital markets have become deep enough to absorb issue sizes like this. So Jio is essentially the reason why you're watching us today on YouTube, reading us on Substack, or listening to us on an audio platform. It's the reason why a lot of companies, occupations, and internet economies exist today, not only in India, but outside it. The momentous decision by Reliance to enter the market in 2016 with virtually free data and talk time opened the floodgates for the Indian digital economy. And you probably know the rest of the story. So before Jio, 1 GB of data cost around 225 rupees. But today, it costs about 10 rupees. UPI, which was launched the same year as Jio, went from near zero processing to processing 228 billion transactions in 2025. India went from 3 crore demat accounts to over 20 crore. The number of online shoppers has tripled, and data consumption per person went from less than 0.2 GB a month to over 42 GB. Now, whenever we used to look at the results of a behemoth like Reliance, it was hard to see what was happening at an individual business level. Each division of the conglomerate is its own labyrinth. But this listing means we'll get a proper view into India's biggest telecom company for the first time. And the same will be true for Reliance Retail when it eventually goes public. With that, let's dive into the prospectus of India's largest telecom player. In FY26, Jio platforms earned Rs 1.46 lakh crore in revenue, and this is mostly from one thing: mobile broadband subscriptions. Customers buy prepaid or postpaid plans. Those plans give them data, and Jio charges for them. That's the core of the business. As of March 2026, Jio serves about 52 crore mobile customers, or around 40% of the Indian mobile market. And in comparison, Airtel has about 37 crore mobile subscribers and Vodafone Idea has about 19 crore. The network carries about 60% of all wireless data traffic in India, and the average data consumption per Jio customer is 42 GB per month. Now, India has about 126 crore total mobile subscribers today, and of these, about 26 crore are still on 2G networks. They're mostly customers of Vodafone Idea and BSNL who have not yet upgraded their phones to 4G. Now, these are Jio's most obvious growth pool. Every one of those customers who buys a 4G phone is a potential Jio subscriber. Now, the key metric for any telecom is average revenue per user, or ARPU, which means how much the company earns per customer per month. Jio's ARPU is Rs 214 per month, and for comparison, Airtel's is Rs 257. Now, despite having fewer subscribers, Airtel extracts more revenue and profit per customer. And this is because Airtel has deliberately focused on premium customers, postpaid users in cities, and enterprise accounts. while Jio has a larger but more mass market base. And both strategies have worked for the two companies, remarkably similar in size but built on very different customer mixes. That being said, Jio's ARPO has also been steadily growing from Rs 181 in FY24 to Rs 214 now. In July 2024, Jio raised its tariffs by 10 to 25% across different plan tiers, and Airtel followed immediately. Remember, this is an industry with effectively three players, and one of those three, Vodafone Idea, has mostly been financially distressed. So the pricing power of the remaining two is high, and customers do not really have many options. And such is true for the telecom industries of most countries. So, what makes ARPU growth particularly powerful for Jio is that the incremental revenue flows almost entirely to the bottom line. The network is already built, the spectrum is already paid for, and the towers are up. So, when each of Jio's 52 crore customers pays 10 rupees more per month, that's roughly rupees 6,000 crore extra revenue a year with almost no additional staff or infrastructure cost attached to it. Beyond mobile, Jio also earns from its home broadband business, which can be divided into two parts. One is Jio Fiber, which connects homes with optical fiber, and the second is Jio Air Fiber, which does the same wirelessly using 5G spectrum, essentially replacing the need to dig up roads and lay cables into every home. As of March 2026, Jio has 2.71 crore home broadband customers and a 42.6% market share in fixed broadband in India. Enterprise services offering cloud connectivity and private 5G networks to businesses and factories is a third revenue stream. And these businesses are growing but tiny relative to mobile. So, how do the numbers look for Jio? Jio made a whopping rupees 1.46 lakh crore in revenue, with the profit being about rupees 30,000 crore. These are strong numbers by any measure and perhaps unsurprising. But the more important number to note here is free cash flow. See, building India's 5G network cost a lot, and in FY24, Jio spent around rupees 53,000 crore on capital expenditure, which included the purchase of spectrum, installing equipment on towers across the country, laying fiber, building data centers. And that left them with not a lot of cash in comparison to their revenues, just rupees 1,500 crore, which is still a wild number in absolute terms. But by FY26, that had fallen to rupees 34,000 crore as more of the network got built. And simultaneously, the cash flows improved manifold to rupees 42,000 crore. Now that the hole is dug, it's time to fill it up. What's also worth noting is that the biggest chunk of this IPO, rupees 27,500 crore, will be used to clean up debt. So Jio borrowed heavily to fund their capex, including in foreign currencies. And borrowing in dollars is cheaper, but there's a catch. If the rupee weakens, the loan becomes more expensive to repay. So after paying off foreign loans, Jio will still have some debt on the books, but it also has over rupees 43,000 crore sitting in cash and investments, enough to cover what remains. On a net basis, it'll owe almost nothing. A company that just spent over rupees 1 lakh crore building a network comes out the other side essentially debt-free. So this IPO will make Jio independently trackable for the first time. Today, Jio's numbers get reported inside Reliance's quarterly results, but with limited detail and surrounded by oil, retail, media, and financial services. A listed Jio will have to report in full every quarter, which means investors and analysts will be watching ARPU growth, the pace at which 2G customers migrate, how fast capex continues to fall, and whether digital services revenue starts appearing in a meaningful way. The listing also sets a standalone market valuation for Jio for the first time. The company that built the internet infrastructure of modern India is about to find out what the market thinks it's worth. And for the hundreds of crores of Indians who've been paying Jio a small amount every month for years, that's a number worth watching. For all the sources mentioned in this video, don't forget to check out our newsletter. The link is in the description. Coming to the second story. Exactly 3 months ago, on March 23rd, we covered what a super El Niño could mean for India. At the time, it was still a forecast, but since then, the forecast has become absolute fact. So NOAA confirmed the onset of El Niño on June 11th, and sea surface temperatures in the Pacific are on track to cross 2 degrees Celsius above normal by October. That's borderline super El Niño territory, rivaling the occurrences of 1998 and 2016. In India, the IMD downgraded its monsoon forecast twice and pegged the probability of a deficient season at 35%, more than double the historical base rate. And the monsoon made landfall in Kerala 3 days late on June 4th, pushed through the south and east, and then stalled. As of June 17th, cumulative rainfall is 38% below normal, and 22 of India's 36 meteorological subdivisions are deficient. Central India, the country's agricultural heartland, is 62% below where it should be. And the impact of this has already begun showing up. On the farms, Kharif sowing as of June 12th is down about 4% year on year. Pulse sowing has cratered by 43%, cotton by 28%. India's 166 reservoirs currently hold about 55 billion cubic meters, or roughly 30% of their total live storage, which is lower than last year. Perhaps the most alarming of these stats is in Mumbai, which right now only has enough water to meet the city's needs for 40 days. On the grid, power demand hit a record 270.8 gigawatt in May, 4 consecutive days of all-time highs as heat waves baked northern and central India. Consumer food inflation hit 4.8% in May, the highest in 16 months. The RBI has already raised its inflation projection to 5.1% and cut its GDP growth forecast by 0.3 percentage points to 6.6%. So the question then is whether India has enough defenses to weather this storm, or rather, the literal lack of it. Let's start with the energy grid. Now, proper generation isn't the government's primary worry. India's installed power capacity has doubled over the past decade to 520 gigawatt. Coal plants running at around a plant load factor of 70% have headroom to ramp up further, and at peak demand, this system seemed to hold. Interestingly, solar alone contributed nearly 22% of output. That is, by any metric, an impressive statistic, and more importantly, a much needed defense as coal plants may strain. Off-grid installations could also help remove pressure on the national grid, and as we noted in the previous story, paradoxically, by suppressing the clouds needed for rains, the El Niño might ensure more time for the sun, and therefore solar power. But solar's usage is still limited because of the lack of battery storage to make use of at night time. India will need an estimated 1.38 lakh circuit kilometers of additional transmission lines to support the integration of renewables properly. And in 2025 alone, the grid curtailed an estimated 2.3 terawatt hour of solar power because infrastructure couldn't safely absorb it. Clean energy produced, but wasted. But the real anxiety is not really power generation, but power transmission, a topic that we've spent quite some time covering on the Daily Brief. See, El Niño-driven heat waves don't hit the country uniformly, and demand surges are regional and sharp. A state boiling at 45 degrees Celsius pulls far more power than the grid planned to route there. So overloaded transformers, stressed feeders, and local distribution networks designed for a different era become choke points. For instance, during May's record demand, infrequent blackouts were reported in Delhi and Chennai because the last mile of the grid couldn't carry it. In fact, in the last few weeks, Delhi saw a series of fires that were attributed partly to the poor state of Delhi's grid. But the most underrated piece of what happens to India's energy grid is the one that's most directly affected by it: hydropower. So hydropower accounts for about 10% of India's total power generation, and India's hydro capacity currently stands at over 51 gigawatt. But what makes hydro disproportionately important is its flexibility. Unlike solar, which fades at sunset, or thermal plants that take time to ramp up, hydropower can be turned on and off at will. It's the grid stabilizer, keeping the lights steady when other sources fluctuate. Now, El Niño attacks this directly. Less monsoon rainfall means lower reservoir levels, which means less water flowing through turbines and hence less generation. In 2023-24, an El Niño year, hydropower generation fell by 16%. And as per Mint, this year, with reservoirs already below last year's levels and the monsoon stalling, estimates suggest generation could drop about 10%. And of 20 reservoirs linked to hydroelectric projects, water levels in half are at or below last year's levels. The impact isn't uniform either. Hydro projects in the Himalayas, which are built on snow fed rivers, are somewhat insulated, and they may even benefit from higher snow melt this summer. But reservoir based projects in central India are the most exposed. They fill during the monsoon and power the grid through the year, but without the rains, a shortfall will bite hard. And the result is a double bind. When the monsoon weakens, farmers pump more groundwater to irrigate their crops, which releases electricity demand for agricultural pumping. And at the same time, the hydro supply that normally helps meet that demand is declining. So the grid has to serve rising demand while facing shrinking hydro contributions. And then coal fired thermal plants, which are running at high load factors already, have to pick up the slack. And that only increases our dependency on coal. Now, what about agriculture? So, for food, India's defenses against a weak monsoon are, on paper, more substantial than they've ever been. Wheat stocks as of June 1st stand at 53 million tons, nearly double the official target and the highest level since 2021. Rice stocks 68 million tons against a norm of 13.5 million tons. And these are record levels for the public distribution system, but that's what you need to absorb a significant production shortfall without triggering a supply panic. And this is already getting complemented by the trade policy toolkit. For instance, in May, sugar exports were outright banned until September this year. And as we covered previously, ethanol, which is made out of sugarcane, uses a lot of groundwater. With an active industrial policy for fuel blending, India will look to fulfill domestic demand for ethanol first. Additionally, India has used a rice export ban as recently as 2022, lifting it only in late 2024, early 2025. This is also a quick tool readily available to use on short notice. Meanwhile, ethanol is also made out of food grains, and India has diverted rice and maize before towards ethanol production. That lever will now likely become limited to prioritize food security. Now, the dairy sector, whose results we covered recently, adds another layer of pressure. Heat stress is already weighing on milk yields, and a weak monsoon threatens fodder availability, which is the raw material that keeps India's dairy supply chain running. So the sector has been going through a raw milk shortage for much of the past year, well before El Niño, and that hasn't eased up at all. Yet some companies like Dodla Dairy achieved record sales figures in the quarter. But that was partly due to stocking up well in advance, and partly the companies have been seeing some bright spots in India in terms of rainfall. Now, what has increased our resilience is expanding smarter irrigation systems. India's irrigated area has risen from 49% to 56% of total sown land over the past decade. Now, India's irrigation story has largely been one of moving away from leaning on canal-based systems in the 1950s to a tube well-heavy system today. The former is mostly useful in times of heavy rainfall, while the latter makes use of groundwater, extremely helpful when the rains fall short. Ideally, this means that even in times of drought-like conditions, there should be enough backup of water to handle the needs of the sowing season. But this makes us more dependent on groundwater, whose extraction is intense in India. We are the largest user of this resource in the world. Nationally, we use 60% of our annually replenishable groundwater, and what's more, in a cruel paradox, 61% of groundwater recharge still comes from rainfall, which means a weak monsoon undermines the very backup system farmers depend on. There's also significant variation in how states extract groundwater. For instance, Punjab, Delhi, and Haryana extract over 100% of their groundwater, essentially taking in more than what the ground can hold. As of 2024, 11% of India's groundwater blocks were classified by the state as overexploited. Now, that's still down from 17% in 2017, but it does leave certain states far more vulnerable than others. Now, groundwater extraction is only one of the ways in which water management systems of various states differ. So, as per CareEdge, the most vulnerable states, Odisha, Chhattisgarh, Madhya Pradesh, Uttar Pradesh, Bihar, are the ones with low irrigation coverage, high crop dependence, and limited diversification. And Rajasthan, counterintuitively, ranks among the most resilient because it has minimal reliance on water-intensive crops and a small agricultural share in its overall economy. But Punjab, despite strong irrigation and high reservoir levels, ranks lower than you would expect, because it remains heavily dependent on water-intensive rice and sugarcane. On the ground, the Agricultural Ministry has flagged 197 districts as most vulnerable and ordered state governments to overhaul their contingency plans, many of which hadn't been updated in a decade. Drought resistant seed stockpiles have been pre positioned in high risk areas, and crop weather watch groups have been formed to monitor conditions weekly. The buffers are among the highest they've ever been. The policy toolkit has also been prepared. But are they enough? Kharif sowing as of mid June has declined from last year, and the crops most exposed are overwhelmingly rain fed. About 90% of the area under pulses and oilseeds depends directly on monsoon rainfall. There is enough reservoir capacity for now, but it's depleting faster than it should be this early in the season. And that matters not just for the Kharif crops, but for the Rabi season that follows. If reservoirs don't fill adequately during the monsoon, winter crops like wheat and mustard face irrigation shortfalls months from now. The last Super El Nino in 2015-16 brought India's worst drought in decades, causing widespread crop failure and farmer suicides. It also marked the start of one of the worst prolonged drought periods for most of South India, and naturally, climate change was the amplifying effect. But this time, we have climate change and oil prices which are elevated due to the West Asia crisis. Fertilizer supply chains were already under stress from the Strait of Hormuz disruption even before El Nino arrived. So, whether the defenses hold depends primarily on what happens in July and August. If history is any indication, the most effective resolution to this is timely rains. Now, coming to the tidbits. BHEL and Coal India will jointly invest Rs 25,000 crore in a coal gasification project in Odisha. The project aims to convert coal into feedstock for fertilizers and chemicals, create jobs, and reduce India's dependence on imports in key industrial sectors. Coming to the next tidbit. Sun Pharmaceutical Industries will acquire 100% of Innovcare Life Sciences in a deal valued at about Rs 271 crore or $28.7 million. The acquisition is part of Sun Pharma's efforts to strengthen its portfolio and expand its presence in the pharmaceutical market. Coming to the final tidbit. Voltas sold over 1 million air conditioners within the first 3 months of FY27, the fastest it's reached the milestone. The company attributed the achievement to strong consumer demand, a wider distribution network, and growing interest in its AI-enabled product range. That's all the news I have for you. Thank you so much for watching, and see you in the next one. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.